Ever wondered how the world of cryptocurrency coincides with real-world assets? Well, let me introduce you to tokenized real-world assets, or RWAs. These are tangible or intangible objects of value that are converted into a digital token on a blockchain. Despite initial skepticism, tokenizing real-world assets is gaining momentum, with the potential to revolutionize sectors from real estate to renewable energy. Originally dismissed as fleeting hype, the market for tokenized RWAs has seen impressive growth. In fact, Boston Consulting Group anticipates that the tokenization of global illiquid assets could create a whopping $16 trillion industry by the decade's end. This isn't just speculation. Recent data suggests that the total value of tokenized real-world assets reached an all-time high of $2.75 billion in August. The trend is clear. Tokenization is not just a buzzword, it's a burgeoning industry. In essence, tokenizing real-world assets is transforming the future today. Now you might be thinking, why are tokenized assets gaining such traction? Well, let's delve into that. A recent survey by research firm Sealant and banking giant BNY Mellon revealed some fascinating insights. A whopping 91% of institutional investors have expressed interest in tokenized assets. Even more impressive, a staggering 97% agreed that tokenization is set to revolutionize asset management. This high level of interest from institutional investors isn't just a passing trend, it's an indication of the significant impact these investments are having on the industry. The infusion of institutional-grade investments into tokenized assets is expected to drive exponential growth in the sector. More liquidity flowing into the space will likely create a more sustainable bull market, with less capital flight at its peak. Indeed, tokenized assets are revolutionizing asset management. They're breaking down barriers and opening up new opportunities for investors worldwide. It's an exciting time to be part of this financial revolution. But what's fueling this shift towards tokenized real-world assets? Well, multiple factors are at play. To start with, regulatory clarity in jurisdictions like Switzerland is paving the way for successful pilot projects. This in turn is building investor confidence and encouraging further adoption of tokenized assets. Furthermore, the unsustainable yields in decentralized finance, or DeFi, have led to the collapse of many major crypto projects. This has nudged investors towards seeking sustainable, real yields, the kind that tokenized real-world assets can offer. Investors are now keen on transparent explanations of where these yields come from, and tokenized assets provide just that. They offer clear yield sources and have gained increased recognition from traditional players. But perhaps one of the most significant driving forces behind the shift towards tokenized assets is the democratization of investments. Take real estate, for example. Before, the high entry barrier left many investors, especially those from lower economic backgrounds, out of the game. Now, thanks to tokenization, these individuals can invest in fractions of houses, buildings, or even resorts. They're no longer sidelined, but are active participants, contributing to the growth we see in the market today. So as we move forward, it's clear that the tokenization of real-world assets is more than just a trend. It's a game changer. It's breaking barriers, democratizing investments like never before. More noteworthy developments surrounding the space. As predicted by international experts, a large number of investors from the Web3 and Web2 may be drawn to Lumishare upon its launch, as it will serve as an asset-backed NFT marketplace for tokenized renewable energy assets, LUMI Place. But let's not forget that tokenization is a versatile process, adaptable to a myriad of asset classes. From exclusive collectibles to diamonds, luxury watches to classic cars, each is being reimagined through the lens of tokenization. Even securities and carbon credits are entering the fray, opening up new avenues for investment and speculation. And it doesn't stop there. The ripple effect of tokenization is making waves in traditional finance too. Bonds, stocks, exchange-traded funds, these stalwarts of the financial world are not immune to the transformative power of tokenization. Imagine owning a fraction of a Picasso painting, a sliver of a diamond, or a share in a vintage Ferrari. Tokenization makes this possible, breaking down the barriers to entry and democratizing access to assets previously reserved for the privileged few. In the tokenized world, every asset can be fractionally owned, traded, and appreciated. It's a shift that is fundamentally changing how we perceive value, ownership, and investment. The world of tokenized, real-world assets is vast and ever-expanding, marking a new era in investment and finance.